All right, you can call it the increasing appetite and the romance of African countries with China. You will not be wrong, but hey, many who argue that the benefits may come into indeed discredit this argument. But we'll get into it and do some analysis of what's happening with the Africa-China relations and how we can push for a win-win argument if that is going to be possible, considering everything else that's happening with other countries, not only Ghana, on the continent with China. Good evening to you. This is Business Focus here on TV3. My name is Alfred Okansi. We have our eyes also on what's happening on the stocks and the commodities market as well, and the strength of the currency. We'll do some analysis this evening here on Business Focus. We're highly interactive. Feel free to join us with your thoughts, your views and comments and opinions as we go on in the bulletin. As always, we're live on DSTV channel 279 all across the world, on TV3 Ghana, on Facebook. Let's start off the discussion this evening with MTN. It has raised a total of 1.146 billion cedis from its initial public offering. Now, the amount raised from the IPO shows that MTN fell short of its target of 3.47 billion cedis by about 2.3 billion cedis. Now, the telecom company, however, says the performance is highly commendable considering the volume of the offer. We did some analysis getting into this and how this would pan out when it finally lists on the stock exchange on the 5th of September, as was announced.
We are in a time where we are having some challenges in the financial sector. Some banks have gone under and people are worried about their monies and all those things now. So, and there is, some people will say, a bit of a crunch, that finding money is a bit difficult these days. So all those could have played into the kind of participation that locals had in the offer. But I think there was good publicity. There was some time to have it done. But I still think that Ghanaians probably was an issue with money. If we assume that the minimum that NCA said Ghanaians should participate is 30% or 35%, now that minimum has not been reached, what is the plan B? And I think back then I suggested that if it's possible to have maybe some fund created, maybe let me say by the government, to mop up the rest of the issues that are not taken and hold it in trust for Ghanaians, so that these can be released as time goes on, so that government can sell it off to Ghanaians as and when there are opportunities. I'm sure that even that can be done at some profit to the government. That was what I suggested in the case that the minimum was 30%, 35%, and they are not reached the minimum. But as it stands now, if the NCA agreement says just give the opportunity to Ghanaians, they have done that. Ghanaians have unfortunately not participated as much as we wanted to. Once they have fulfilled that requirement by NCA, then nothing holds them to do anything else, unless the company decides that going forward they would still want to have a certain minimum percentage of Ghanaians participating, in which case they can be releasing them as time goes on through maybe rights issues or open offers and all that. So they have various means. If they want to really increase it to a certain minimum percentage, they can do that as the years go by in tranches. The IPO has not been fully subscribed. It has been successful though, and we are hoping that as they come to the market, we will see a lot more activity onto the market. With this issue, a big chunk of the economy is going to be represented on the exchange, which is the communication sector, which is playing a very big role in our economy, and that is impressive. Because in certain jurisdictions, you can take a look at the market, the performance of the market, and by that that will be a proxy for how the economy in total is performing.
So that's Adam Afenyo, who is the managing director of the First Bank brokerage there, sharing his thoughts on the MTN IPO, which indeed, all other things being equal, by September 5, we should have it listed on the Ghana Stock Exchange. I mean, MTN as a company. I've been joined in studio by Winslow Sakifio. He's the head of capital markets at First Bank. Winslow, thank you very much and good evening to you. It's great to have you. Yeah. Now, would you go with the proposal that government should probably look at mopping up the rest of the share offer that was not subscribed for and then holding it in trust for Ghanaians so as to release us and when it's needed?
I wouldn't want government to come in, especially when it has to do with the stock market, because it would disrupt trading on the market. What I think should be done is for the company to hold it in their treasury, and then with time they come out to issue tranches of it. Unfortunately, we couldn't get the 35% Ghanaian ownership. And when you even look at the numbers, we are looking at less than 5% Ghanaian ownership currently. So there's a long way to go. And I don't know how NCA would tackle that now, because the 4G license required that you get 35% local ownership. Currently, we are looking at less than 5%, about 4.49.
Absolutely. So what went wrong? I mean, because the enthusiasm, you were here, I recall, when the whole analysis before the issuing came up, the level of enthusiasm was high. And then the IPO eventually takes place, and now we have these results. I'm sure you've been doing some analysis into this outcome and what could have accounted for this.
If we want to look at the outcome on its own, you could say that they fell short of making 100% subscription. But when you compare it to other listings that have been done in the past, this one is huge.
This is the highest.
Yes, the biggest we saw was ADB, 326 million. This one is 1.15 billion. So if you look at the market as a whole, it's a huge investment. But I mean, everybody felt MTN is a big name and a lot of people would invest in it. But, you know, Ghanaians are not so comfortable with equity investment. And True. That is what is causing the problem now. So
then how do we deal with this? Is the biggest? Yes. I mean, but then there still could have been a different situation if it was even ascribed up to about 50% at least. Because now we're talking about 35%.
32.
32%. Yeah. So what do we do going forward? I mean, you don't have subscribed to the proposal of government coming in. What's the next proposal we should be looking at?
I think we should look at trying it after maybe this year, next year when the market, you know, the market is also in a crunch sort of, prices are falling, investors are getting out. So maybe next year when the market is right, MTN can come out and issue another tranche. And I think that's the best way to go, to issue it in tranches. Our market is small. The debt is not that deep. So we need to do it in stages. At least that would cause more people to invest in the MTN shares.
Fantastic. I would like to now go into what the commodities market, or maybe let's start with the stocks, because this directly feeds into how the stock market is going to behave after September 5, if it is eventually listed. So what's the situation with the stocks now?
Currently, we are seeing the market correcting. Initially, we thought we had seen the bottom, but it looks like investors are still jittery and they are taking their market out of the market. Volumes have gone up, and it looks like there's some amount of negative sentiment on the market. I think investors are hoping that when MTN starts trading, there'll be some sort of positivity to the market, which would lift the market up a bit. But the problem is MTN is a totally new sector on the exchange, and nobody knows how investors will even react to it trading on the exchange now.
I see. So I know, let's do a quick analysis of the week ending and how the week has begun now, because I recall Fan Milk was, I think, the one of the biggest losers last week. Yeah. What's the situation now as we speak?
As we speak, the market hasn't picked up. We are still seeing falls in the market. And if you compare what is happening on the market today, it's likely we'll see a fall tomorrow. MTN will list on Wednesday. So maybe after Wednesday, we can see the market picking up, because there will still be some activity in MTN shares when it's listed.
See, what about the commodities market as well? Because from what I see from our analysis, oil seems to be also gaining now on the world market in appreciation. Unfortunately. Yes. Why is it unfortunate if a barrel of crude oil is now about $78?
It's 77.57.
Because just when we're coming on air, the Bloomberg put up $78, a little over $78.
It's almost pushing 80 now. And it's all because of tension between the US and Iran. You know, US said they were against the nuclear deal, so they had pulled out of it. And it looks like supply from Iran have been cut short. So we'll see a lot of it going forward. And, you know, there's also tension between US and China, and that would also feed into the crude prices. So for crude, we will see some increases in the prices. And it's likely we'll see $80 per barrel very, very soon.
Let's go on to gold, and maybe finally on this.
Gold is seeing some downtrend because the dollar is strengthening, and it's all because we are still seeing a lot of tension coming up, and a lot of people are relying on the dollar now. So the dollar is gaining grounds, the gold is losing some grounds, and going forward we'll see gold losing a lot of grounds, especially with the tension continuing. For cocoa, the situation is not so different. If you are a cocoa exporting country, then you wouldn't be so happy because prices are falling. We expect Cote d'Ivoire to have a bumper harvest. Initially, there was the concern with rainfall patterns, but it looks like that has subsided. Cocoa harvest will go up this year, and that will bring the prices down.
See, but interesting, because and maybe before we round up, there's this report from the Bank of Ghana indicating that non-performing loans have been increasing now, reach about a little over 8 billion Ghana cedis. And when we thought that government was one of the biggest defaulters and in contributors to non-performing loans, this report actually indicates that the private sector actually holds over 87.3%.
Yes, I think since the beginning of the year, let me take it from last year, we had non-performing loans going down a bit because the economy was improving. But this year, it looks like things are not going too well. We are seeing NPLs picking up again, and it will get worse before it gets better. Especially when you look at the smaller banks, you have some of them getting close to about 46-47% NPLs, and that is not so good for the banking sector.
It will get worse and hopefully get better eventually. Winslow, thank you very much, as always, for joining us this evening. He's the head of capital markets at First Bank, doing some analysis with us here on Business Focus here on TV3. Now, Ghana and China have signed 8 cooperation agreements and memoranda of understanding in different sectors of their respective economies. Now, the agreements and memorandum of understanding are aimed at deepening the ties of cooperation and the bonds of friendship that exist between the two countries. When this came up over the weekend, there's been a number of reactions to it, but take a look at this.
The agreements are the One Belt, One Road Memorandum of Understanding, Memorandum on Regional Aviation Cooperation, Agreement for Cooperation in the Peaceful Use of Nuclear Energy, and Cooperation to Carry Out Maternal and Child Health Project. The rest are Framework Agreement on Financing Insurance Cooperation, Economic Cooperation on Phase 2 project of the University of Health and Allied Sciences WHO, Cooperation on the expansion of the Cape Coast Stadium, and Cooperation on the supply of police vehicles to the Ghana Police Service.
We're counting on you in the way in which you worked with Bowie Dam, the high quality work, that will also be a feature of the arrangements that we're making with Sinohydro. And therefore, Ghana too is very keen on providing as much support as possible to make the Sinohydro arrangement come on stream quickly. My understanding is that the agreement that was signed this morning with the Sinosure agreement, with the signing of the agreements this afternoon that we're going to do here, will complete virtually the entire group of documentation that was required to get the Sinohydro transaction.
So this has reawakened, if not already heightened, that conversation of China's growing influence in terms of trade and investment on the continent. Professor Godfred Bobkin is a senior lecturer at the University of Ghana Business School. He joins me on the telephone. Prof, I thank you very much. Good evening to you, sir.
Yes, good evening. Good evening, Dr. Slitman.
Great to have you, Prof. Now, I know that you've been doing an analysis a lot more of the China-Africa trade and the call for a win-win situation. But there is a sense in which China is obviously the bigger winner, isn't it? Simply because it has the upper leverage in most of the negotiations. Would you agree?
Yeah, precisely, yes. There is a growing concern about the influence of China in Africa. And the reason the concern is heightened, a little bit worrying to expressions of observers, even from the West, is the fact that Africa doesn't have a comprehensive strategy or framework of engaging China that enables the continent to be able to also negotiate from a position of strength. That is a problem. And because we need a lot of revenue in the face of increased infrastructure deficit, we look a bit begging when we go to some of this negotiation table, and that confers some kind of advantage on them. So they tend to negotiate more from position of strength than we are able to do. Others have even suggested that this is the new form of colonization that China is pursuing quite strongly. It is happening so because the West, the traditional inflows that have come from the West in terms of aid, in terms of concessionary loan and all of that, are all tapering off. And therefore, China is taking advantage of that vacuum. And then the point is that Africa is a bit at the receiving end largely because we need development, but we are unable to pay for that development from our own internally generated funds. And therefore, we tend to look outside more. And it seems that the kind of concessions we get from China, we are unable to get that from the West. And therefore, we all tend to China, and everybody is going to China. It's not only Ghana. You can look at it. You can look at the African continent in entirety, and you begin to realize the growing influence of China. China, on the one hand, may need Africa more than Africa needs China because of Africa's endowed natural resources. But the point is that how are we able to parcel this on the negotiation table to ensure that we get our fair share in all these arrangements?
Prof, it's interesting that you make this analysis of, and I would start from where you ended. China may need Africa more than we need them. So, for example, in Angola's case, government of Angola supplied oil to China in exchange for Chinese financing and construction of major infrastructure projects. Very similar to what we're actually doing with them now, leveraging our bauxite.
The barter system.
Absolutely, for that. So you see that in many other countries. But the issue that I have seen from my own analysis over the period is that the asymmetry of power in the negotiations of transactions where you're actually giving your mining rights away just because you want to build maybe a superhighway. Can Africa or Ghana do anything about this?
Well, I think some of these things, my understanding is that if Africa could come together and have a comprehensive framework or strategy in terms of how they will relate to China, it may serve Africa overall its own constituent rather than the approach that we are using currently. It's going to be very difficult, really, to negotiate from position of strength under the current arrangement because of the impatience among growing African population. Because it's democracy, it's 4 years, people want development. But our tax effort in terms of our revenue generation still remains very low. And therefore, the attention has been to look outside external markets. We are not getting the needed support that we would need, like we have relied on in the time past. And therefore, so when you see the China's own growing economy actually needs to eat the resources of Africa to fuel its own economy, whether you look in terms of hydrocarbon production, oil and gas, cocoa, and those things. But unfortunately, these are mostly raw products. Is that okay?
Yes.
And usually you don't command a lot of price when it comes to just exporting raw products. The terms of trade are usually unfavorable to Africa. And it seems that because we don't have the borrowing space, able to procure debt in the national capital market, we tend to do many of these concessions. And the question is the pricing. Aren't we giving in a little bit more for little? Sometimes, when we find these agreements, is doing the implementation, then we only reflect that we have actually given up more than we should have. So, Africa, the point is that the way we tend to approach our developmental agenda individually tends to affect us. When you look at illicit financial flows alone from Africa to these same developed countries, annually Africa loses in excess of $50 billion.
50 billion annually.
Illicit financial flows, which is part of this whole concept called transnational crime, embodying crude oil theft, illegal, unreported, unregulated fishing on the water bodies of African countries, for which China itself is also part. You can talk about crude oil theft, for which Nigeria is a record holder. You can talk about so many things in terms of revenue losses to Africa. So others have argued that if Africa could come together with an integrated strategy, sharing information among African countries and negotiating on that basis, we could actually reduce these illicit flows fueled largely by the underground or the shadow financial economy, which tends to affect us. And we may actually depend less on these countries. But you see, we are helpless to some extent.
Absolutely.
And sometimes because of the so-called aid, which is not free, oftentimes it's much more expensive than going for a debt from the international capital market. So Africa, China says we are building for it for free. Our Ministry of Foreign Affairs got friends in this country. They said they are building it for us. What is the cost? They said it's free. So, and all of that. Look, when you look at studies have shown in terms of the illegal mining activities of Chinese citizens and companies, not only in Ghana, in the whole of the African continent, is massive in terms of revenue losses.
Absolutely.
So these are, if we are able to block these leakages, perhaps we may depend a little bit less on them. But as it stands now, we have huge infrastructure deficits, which tend to impose restrictions on the growth drivers of the economy. And therefore, it takes not only in Ghana, Nigeria, Angola, and those countries, because they have these natural resources, it seems more attractive even to China to engage us. But there are real concerns that want to believe that Africa needs to come together and then address them from a more integrated point of view.
Pretty interesting proposal there. Professor Bobkin, I want to thank you very much for this. And what we're taking away is the proposal for an integrated strategy for the continent to engage China as an Asian tiger or a superpower. Grateful for your time this evening. Thank you, sir.
God bless you.
Bless you too. That's Professor Godfred Bobkin. He's the head of finance at the University of Ghana Business School, making this proposal of an integrated strategy so that Africa as a continent will come from a position of strength in negotiating with China. But just so you have an idea of why this is an issue and why we should also be asking questions as a country, let's look at the slide, which is going to be on your screens right now, on Africa's trade volumes with the rest of the world. So this is up until 2015. So EU, about $305 billion. That is Africa's trade volumes with the EU. Now, the next is China, and it's actually growing because this number, or this figure you see there, is actually as of 2015. As we speak, it's actually higher than the $188 billion you see indicated on your screens. United States, $53 billion as of 2015, and then UK, $36 billion there. But this figure is as of 2015 there. But then we move on to, as Professor Godfred Bobkin was saying, that these aid that we have from China doesn't come in for free. As a matter of fact, it's something that we pay for through other means. But when you look at the annual Chinese loans to African governments from 2000, that's the year 2000 through to the year 2016, it's been growing over the period. If you check it in 2002, it was just a little below $2 billion. Now, if you fast forward it to, say, 2018 or 2017, it was a little over $6 billion. dropped in 2008 to about $5 billion. I beg your pardon, in 2007. And then also when you move quickly to 2012, you see it hovering around $13 billion. And then in 2013, almost $18 billion. It dropped a bit in 2014 to about $14 billion and dropped again to about $13 billion in 2015. Then in 2016, you see the sharp rise there, as stated in the graph. You see almost $29 billion in Chinese loans to African governments as at 2016. That is what you see on your screens right there. It clearly depicts the increasing influence in terms of trade that China is having with Ghana. We're going to be still having a conversation further on this, but government earlier described as disappointing the minority's letter to the International Monetary Fund on the $2 billion bauxite agreement with Chinese firm Sino Hydro Corporation, which, let me just remind you, it's been signed. The details of it has been given by the president. But essentially, they're asking for clarity whether this agreement or arrangement is a barter in the sense of the word or has elements or characteristics of a loan. The minority argues that under that current agreement with the IMF and the fact that that agreement with such a quantum of money could adversely affect the country's debt stock. I spoke with former Finance Minister Seth Terkper, who believes that this decision to go to the IMF for clarity is good, since it will bring some transparency to the whole arrangement.
Why the IMF? It's because our debt sustainability analysis and our debt to GDP ratio is calculated jointly by the World Bank and the IMF. And so they have the methodology for treating developing country debt and the methodology for treating advanced country and other debts, those who are capable of paying. We started a policy of self-financing in order not to put some of these debts as public debt. Because when you guarantee, when the government guarantees a loan, whether for a project that can pay for the facility like bauxite, or, and there are examples already, or crude oil, which is paying for the CDB facility that we use for the gas pipeline and the Chuabo plant, or the MPP's own Bui dam, which they initiated, which we completed, for which we are using cocoa, to repay. What did IMF do in the past? IMF added all this to public debt, despite the fact that we have an escrow account for the oil. When it is sold, the money is paid into the escrow account, the portion for debt service 1.2 times the debt service amount, and then it is transferred to a debt service account, and it is, and then paid, used to service the debt. Despite this mechanism, and Bank of Ghana, guaranteed to the international community and to CDB, and we have not failed, that debt is still part of public debt, the $1 billion that was taken. Bui Dam is still, part of public debt, and it's in there. So unless you don't issue an absolute sovereign or unfettered sovereign guarantee, then the enterprise or the project must show. And Cocoa Board is a good example. When Cocoa Board goes to borrow, because they have proven since 1993 that they borrow and they are able to pay through the same escrow mechanism, which is what we were trying to popularize with the Airport Terminal 3 and the rest, then it becomes public debt. So what the minority is saying is, can you now change the methodology? Because from the term sheet, and I'll urge you to look at the term sheet, because the term sheet went to...
It gives the detail of...
It gives the detail, and it shows that it's a supplier's credit. It shows that Sino Hydro is asking for government protection.
So that's former Finance Minister Seth Terkper there in that conversation, still endorsing that decision by the minority to seek clarity on this whole arrangement from the International Monetary Fund. But African countries have shown a healthy appetite for Chinese loans. As you saw, it's been growing, but some experts now worry that the continent is increasing in debt to China and could soon choke on this. Concerns have been raised as to whether Africa should be wary of Chinese debts and what's happening now. There's more in the following report. A BBC report and analysis raises the question as to whether Africa should be worried about the growing indebtedness to China. The Entebbe-Kampala Expressway is still a tourist attraction for Ugandans, nearly 3 months after it opened. The 51-kilometer, that's 31-mile, 4-lane highway that connects the country's capital to the Entebbe International Airport was built by a Chinese company using a $476 million, that's 366 million euro loan from the China Exim Bank. The Chinese loans comes as many African countries are once again in danger of defaulting on their debts more than a decade after many had their outstanding borrowing written off. At least 40% of low-income countries in the region are either in debt distress or at high risk, International Monetary Fund warned in April. Chad, Eritrea, Mozambique, Congo Republic, South Sudan, and Zimbabwe were considered to be in debt distress at the end of 2017, while Zambia and Ethiopia were downgraded to high risk of debt distress. China is now the single largest bilateral financier of infrastructure in Africa, surpassing the ADB, the European Commission, the European Investment Bank, the International Finance Corporation, the World Bank, and the Group of 8, that's G8 countries combined. China has the lion's share of African debt, but the countries are borrowing from many other sources internationally. So far, China has only paid lip service to such long-term support that will wean African countries of their dependency on the Asian tiger. So live on Business Focus. So that gives you a clear picture of what's happening on the continent with respect to China and Africa trade relations. We'll be back shortly after this quick break. We'll continue the conversation with some more thoughts on this. Do stay. Welcome back to Business Focus here on TV3. Now, quickly continue with this conversation on the China-Africa trade analysis. An economist and senior lecturer at the Economics Department of the University of Ghana, Dr. Eric Osei Asibe, wants government to be firm on its demand for a win-win situation in agreements it enters in with the Chinese government. His calls comes in the wake of what has been described as the growing trade invasion of China on the African continent.
From an economic point of view, I think it's good because any economic cooperation often will have a win-win situation. There's often mutual benefit from such relationship. And I want to believe that now the European Union, and for that matter also Germany and UK, are trying to redefine their relationship with Africans. You know, in time past, the relationship has often been lopsided, you know, where we see these developed countries as donor partners. But these days, you know, it's more of economic cooperation, more of trade and investments, you know, other than just aid. And I believe that this whole craze for Africa, you know, is actually being led by China. I mean, when China took the lead, you know, China did not build that master-servant relationship where, you know, it's only about aid. When you need to, when you're in difficulty, then you go to them and they will give you something little just to try to, you know, give you some kind of survival. But they came in with more investment focus, you know, investing in the roads, investing in mining, investing in oil, gas, and all of that. And for me, I think that is good. And it also fit very well into even our own president's mantra of Ghana beyond aid. And that the key aspect of that is also trying to redefine this relationship, that African countries will no longer be dependent on aid, because although aid has been beneficial in time past, it's really not helped us to come out of the economic downturn or even reduce poverty that much. What Africans need is actually trade and investments.
How should we position ourselves on the negotiation table to ensure that this works to our advantage and not just to theirs?
we should have our development model, right in front of us, where we want to steer affairs to, which sectors of the economy that is likely to have bigger impact on the economy, so that it wouldn't be like they coming to dictate for us, but we actually telling them where we want them to go, which sectors we want them to invest in, which kind of labor or employment, do we require. So I think we have to, find a way of stopping that kind of relationship and define our relationship with all these trading partners, all these development partners, so that when we come, we also put our, options on the table.
So that's Dr. Eric Osei-Asigbit there. We have our options, put it on the table and demand a win-win situation. But some think that that's impossible. But let's get into our Mover segment for tonight here on Business Focus. For those of you who've been watching, the Mover celebrates young people, Ghanaians, who are making impact in the society, creating employment and also creating wealth. And our Mover segment for today, the name Vida Kai, who is the Chief Executive Officer of 360 GV Group. My colleague Ebenezer Ejekum had a chat with him here.
Good evening and welcome to the Mover segment on Business Focus. I'm Eben Ejekum Boateng, and this evening we will be celebrating a wonderful woman, an entrepreneur and a resilient one, of course. And when it comes to HR management, human resource management in Ghana, most of us think about hiring and firing. We're going to go deeper into what Vida Kai is doing and put some meaning to HR management. Welcome, madam. So how did you get into HR management?
Okay, so my background started from reading law, but I was finding law very difficult, I must be honest with you. I deferred my course for a year, and whilst I deferred my course, I was speaking to my HR manager at a part-time job that I was doing, and she managed to talk me into doing HR because she said, when I was doing my master's, I could major in employment law and get an LLB after that. So that's how I ended up doing HR.
So how's HR treating you?
Very good. Very good.
No regrets?
Not at all.
Okay.
Not at all.
So you are with a 360 GV Group.
Okay.
What is that?
Okay, so 360 GV Group is a dream of two sisters. It started about 7 years ago when I came from the UK to visit my family in Ghana. Whilst I was in Ghana, I went to work for my sister for just over a month. Whilst I was there, I realized that some of the managers were blaming their employees for not performing at work. But when I looked deeper, the issue wasn't actually coming from the employees, but it was coming from the managers not training their employees or equipping them to do their roles. So I decided to put myself to the challenge and take this up as a project, train these employees and see what becomes of them.
This brings me to the question of HR just being hiring and firing people. So why do you have to go into HR management itself when you can just hire and fire people at will?
So can I just say HR, when we say HR is not just about hiring and firing. There's more to HR than just hiring and firing. It's the whole employee life cycle, which starts from recruitment, onboarding, training and development, confirmation, compensation, workbench, exit interview. So HR is not just about hiring and firing.
So at the 360 GV Group, what do you do?
Okay, so we are an HR consultancy. We do the HR solution bit, which is the employee relations, writing HR manuals for companies, recruiting, resourcing for companies, and then we do the training and development bit, which we do leadership programs. We have 2 training schools going at the moment, which we are hoping to graduate students with HND.
Over 20 years of experience in HR management. a major challenge or challenges that you faced?
Okay, so sometimes you feel like you've hit a brick wall when you're dealing with directors who don't want to comply with their own rules and regulations. I'll give you an example. So there's rules and regulations saying that if you want to fire someone, as you put it, there's a procedure you need to follow to be able to fire the person. But the director comes to you and says, I want you to fire this person and I don't want them to come back. That's not the way to go. But sometimes when you try and explain it to them, they tell you, it's my own business and this is how I want you to do it. So fire the person. So that can be a bit frustrating for me.
Any successes?
Of course, loads of them. But I just like to talk about the fact that I'm a people developer. I develop people, and that is my highlight. When I see people progress from when they start from nothing, thinking they're not going to be able to do it. I will probably relate it to myself when I started in the UK and I was privileged enough to join a company called John Lewis Partnership, which was voted for the best company to work for in the UK anyway. The role that I was in was mostly graduates from the top 10 universities, so you had people going to Oxford and Cambridge going on the graduate program, and I was fortunate enough to be one of the graduate trainees, although I didn't go to Oxford or Cambridge. So whilst doing my training in John Lewis Partnership, it was very challenging because I thought I have to prove myself 5 times as much as probably my other colleagues who prove themselves because they have earned the place to be there. But actually, when I was leaving John Lewis Partnership, from where I started, I had progressed probably 2 or 3 steps from where my other colleagues were.
Can you say that Ghana as a country, we are improving in HR management?
Oh, I'm really proud. Ghana has moved on from where it used to be when I first visited Ghana 7 years ago, where directors or business owners weren't very supportive of HR. They didn't think HR was important. They pushed us to the corner. But now they are more accommodating. Maybe not as accommodating as they can be, because when you look at the pay scale of managers within a business, you can tell that the HR manager is on a lower pay scale, whereas probably a finance manager or an accounts manager might be on a higher pay scale, which I believe is not fair. In the UK, it's completely the opposite. HR is probably seen as the top 5 or top 7 in any organizations.
Okay, Vida, let's take a look at the banking sector. And we know some workers are already being laid off. How do you tie your business into what is happening now in the banking sector? Okay,
this is where I talk a little bit about change and how change is very uncomfortable, but this is where 360 GV Group can be of help to them. We do a lot of recruitment, training and development, so we would like to speak to some of these people. We like to coach, mentor them, consult with them and give them their confidence back to be able to go into roles. So yes, we would like them to contact us. So they can either visit our website and fill in an application form or give us a bit of details about themselves.
From HR perspective, how do you expect those workers to be treated?
Okay, so there are quite a lot of legal implications when it comes to redundancies and being laid off, but there is a process you need to follow. So there is the consultation process where every employee gets consulted and they get told that this is what's going to happen to the company, whether you're going to be laid off and what the options are for you. So there could be the option of being reassigned in a sister company, or the option of taking a junior role, or an option of taking a redundant package. Whatever the case might be, you need to sit down with the employee, give them the literature available to them, get them to go back home, read about it, and then come back to you when they can make decisions. But I wouldn't sit them straight away and say, these are your options. Obviously, I'm sure that's what they would have done in the banks. They would have given them options to go away with, think about it, and another meeting will be set where they can decide what actions they want to take. And then moving on from there, if they're to join another business or they were to relocate them or reassign them in other sister companies, sometimes what happens is they don't take their full benefits into that new role. So if probably they've done 10 years service, their service might be have to 5 years service, there might be an option because the role might be new to them and not very similar to what they were doing, to probably retrain them to be able to do the role, or put them on some sort of performance management to support their development to be able to perform that role effectively or efficiently. What I wanted to also say is that with this change and redundancy, normally it's not that easy, and I think support needs to be given to these people who go through things like that. They need some sort of counseling sometimes, they need some sort of mentoring, they need to know it's not all lost. I've been there twice, so I'm speaking from experience. Sometimes it can be demotivating, thinking, what did I do wrong?
Yes, can be demotivating. What did you do wrong? But that's where the mover of the week, Vida K, comes in, the CEO of 360 GV Group there. So we have opportunities, and the human resource needs to be trained to take it up. We'll be back shortly after this quick break. We'll round up tonight here on Business Focus. Stay. Thank you for staying with us here on Business Focus. Stay with us. We'll get into News 360. On behalf of the rest of the team, we're grateful. My name is Alfred Okanse. Good evening.